this Ubisoft, the sleeper trade. Is it a short squeeze? Is it not a short squeeze? What's going on over here? So Greg Miller from Kind of Funny sees potential in Ubisoft if they announce they're going to go private. But he makes a GameStop comparison that I don't think holds up. So we'll go through some of the numbers, take a look at the short interest and what traders should actually be watching. Now, Mike, the reason I want to bring this up, you might think to yourself, Tom, actually, let's play the clip, and then after that, we'll talk on the other side. It's going to be amusing to me to play a video game clip for Mike.
Because I'm such an avid gamer.
Exactly.
For those who don't know, I never really play video games.
That's right.
Don't mind.
Here comes the money.
Here we go. Money talk.
Here comes the money. Money.
What's up, everybody? Welcome to your favorite reoccurring financial segment on Kind of Funny Games Daily, Greg's Sound Financial Advice. I feel like a year ago and a half ago, maybe 2 years ago, I told you to buy Ubisoft stock.
Did you?
Because it was down. And I was the one who called the GameStop stuff long before that thing. If you would have listened to me, you would have made like 300% of your money.
Do we have proof of that?
We do.
We do.
This is not a bit. That part. The green lights in this thing. This is a bit. But me saying the game, I would buy it. It was like $1. And it was getting close to be delisted. I was like, no, they're going to sell the consoles. Buy it. And then, of course, the Reddit people did weird things and made it really big. Ubisoft, I was like, hey, we got another shot here. It was like, what, $3.33 when I bought it? I think something like that.
Okay.
And it has continually fallen since then. But now, Kevin, throw it back up. What'd you have there? You had $2.30 cents? Like, again, $2.52. I only have the evidence of when I had my financial windfall from Virgin America, where I love Virgin America, and I bought Virgin America stock. I was a broke little IGN boy, but I bought as much as I could, and it never did that well. But then when they sold it to Alaska Airlines, I made a lot of money. It like doubled in price. So theoretically, when they sell Ubisoft, this should double. That's just smart financial advice. That isn't financial advice. Don't hold me legally liable.
He said it.
It's not real, as you see. But is it?
Oh,
is
great.
it? It could be.
Okay, sure. That's fine.
I love the take. I love the take. This is not financial, or this is a really good financial advice, but it's not financial advice. Don't hold me legally liable.
So I wanted to show that to make a couple of points here. All right, because we're doing the show not just for our own benefit, but I think it's really important for just regular people who are not like so deep or wonky when it comes to fiscal and monetary policy to actually have an interest in the markets. I think that if you're not having some sort of exposure to the markets, you're sort of really missing out, especially for your kids, because time is such a great asset. You can monetize that within the markets. And the reason I don't have time to play video games either. I think I play one video game with my wife every few months or whatever, but I used to be really into the field. And what I love about the video game industry is that for some reason, like, did you know that the video game industry is like 9 times bigger than the music and film industry?
Mm-hmm.
So people don't necessarily notice that the video game industry is like in 2024 they did $272 billion aggregate. Mm-hmm. Music industry did 30 billion, film industry did 81 billion. So it's books, books don't even register. That's how much they're making. And so it's a huge market. They're just like people within the video game industry are just like people within the retail trading, or let's say the beauty, like plastic surgery industry. They're people with money who want to spend it in a discretionary fashion in order to try to get some sort of short-term gain. What happens though when they touch onto the stock market is that they're always anchored onto whatever was the last thing that worked. And this GameStop thing that happened, where they had this explosion with GameStop, had made a bunch of people who jumped on that within the video game industry a lot of money, and they've been wanting the next trade like that. They've been looking for the next thing. And what do they know? They know if a stock in the gaming industry is headed down drastically, and if it's a name that people know, potentially it might be a good trade, either because of a short squeeze or because they might get bought out. So I just want to first put to rest this idea of the short squeeze. Anyone who's watching this, all the kind of funny people, I love you guys. I love everyone in the video game space. I have Kind of Funny merch on my shelf. I'm really part of the whole crew. There is no short squeeze in Ubisoft.
You need a lot of short sellers and high short interest for something like that to happen. Now, before we did this story, I went and looked this up. And it appears at the moment that there are barely any shares short of Ubisoft on the ADR, which is the ticker UBSFY. That ADR is, of course, the one you would trade in the United States. It gives you the access to the UK listing. So the amount of short interest is tiny at the moment, and relative to the amount of outstanding shares, it's basically not shorted at all. You may as well just say there is no short interest because of how small it is.
Right.
So as a result, there's no one to squeeze. If you think you're going to get some upside from 31,000 shares that could disappear in one trade, I don't think that's going to happen.
Exactly. So this is what Mike's bringing up over here. 0% basically shorted. Of the 653 million shares, there's like 30,000 that are shorted, which is basically nothing. Contrast that with GameStop. Why that mattered so much is that back in the day, it was like at one point it was shorted. There was like 7% of the stock that was shorted, like billions of dollars worth of short on the stock, and that was part of the thesis.
Even
That
more concerning is that more shares were sold short than there were shares borrowable to short. That actually represented a significant problem around naked short selling and the broker's responsibility to deliver shares, which is still an outstanding problem that I think the SEC needs to solve for. That obviously is not the same story here with Ubisoft. However, I think in this whole setup here, what trade I find more interesting than Ubisoft, because there's always this chance that sure they might go private, and then maybe you've got some upside to selling the shares before they go private, but the acquisition potential is more interesting at this point, especially if they're struggling to start to prove profits. And I know the potential trade here may be more around Tencent. Did you have something to cover on that?
Yeah, that's right. Exactly. So just to finish off the point there, you just mentioned about them going private. Sometimes a stock, when it goes private, the company's being bought out, and the agreement might be a share price that's higher than the one that's traded right now, and that's where you can make that difference. Saw that in Twitter. I think Twitter went up 20-30% on the announcement. So it was like announced in April, and then the stock went up. We've seen that in Store Capital. We saw that in Panera Bread. There's a bunch of examples where this happens. It's not the rule. It's not the rule that just because they're going private that the stock will go up. But if you're going to make that trade, then you want that trade to be around the time, basically as low as the price of the stock you can get. And just because the price is low now doesn't mean it can't drop 50. It can go from $2 to $1, and then you lose 50% of your money.
Interestingly, Ubisoft is still overvalued from a fundamentals perspective, even at this low discounted price. They should, I would peg them at about $2.18 at the moment, and their performance is just atrocious. I mean, they're losing quite a bit of money from a fundamental perspective. They're holding about 120% debt to equity, so it's just not looking good from a fundamental perspective. There is some potential of it continuing to go down, which makes it maybe not a great buy even at the moment. I would want to wait further, but then you risk that chance of not knowing when a private sale is imminent.
That's right. So that is the risk here. So Greg goes on to say in that video that he bought an asset that was low, and then it got bought out and it went up. But just because a stock is down a lot, so the stock is down quite a bit. Let me just put it on a line chart. It's down quite a bit. So what is this? 90% from its highs.
Right.
But just because the stock is down 90% of its highs doesn't mean you can't still lose 90% of your money. And this is something that I think some people don't necessarily understand.
Yeah, I can only lose 10% more, right?
Right, exactly. I mean, literally, I've had those conversations with people. I go, no, if this stock goes from $2.46 that is right now down to $1, which is
$2.18,
right?
Yeah. Even if it came down to where I think it should be valued, even at $2.18, you still have quite a bit to lose.
Exactly. And the idea here is that you're then banking on the idea that whatever company is going to buy out Ubisoft wants to pay more than the higher share price. They could pay lower, for crying out. They could do that too.
It's possible.
And so, yeah.
Especially with the amount of debt that they have in the books, that it could ultimately end up getting purchased for less than its current market value.
Exactly. And so the what's floating around right now in the Ubisoft space is that there's a big game that everyone was waiting for, Assassin's Creed Shadows.
Assassin's Creed, right.
Yeah.
My favorite one. I play that a lot.
Oh, really?
No.
I was like, we could have a conversation about Assassin's Creed afterwards. That the idea is that they delayed the game a month, and the scuttlebutt is that they did that in order to push it into the next fiscal year, so that this fiscal year looks good enough in order for them to get bought out at a higher price. So you can't guarantee any of that. Sure, they probably want to be bought out, but you can't rely on that. But if you are going to rely on it at all, you want to time your trade for essentially around when you think that news is going to come out for the private sale, and then
Yeah.
you take your risk either way.
It's a risky one. So I want to flip this trade around on the other side because I just think that Tencent is actually more interesting, especially with its recent pullback. Tencent recently had about a 11 or 12% pullback on news of potentially there's sort of a actually I can't glean what news actually pulled that one back, but it wasn't around the Assassin's Creed situation. Right. But if they are a potential buyer, they're actually currently undervalued from a fundamentals perspective, and they have a much stronger balance sheet than Ubisoft does. So I would think Tencent looks like a much better play, especially as it pulls back to this current support level. If that acquisition does take place, that's usually great news for the acquiring company, and we could see some continued upside from there. I would peg Tencent somewhere around about $70 a share from here.
Oh, really? So if that's the case, then we're talking about a $70 a share would be 50% increase from here.
Yep.
That'd be pretty good. So a pitch to Greg, this is the trade you want to take a look at. Plus, Tencent already owns like 9% of Ubisoft, and I think 49% or something like that of the holding company that's involved with Ubisoft.
Yeah.
And so it's likely that they're if there's going to be a buyer at all, it might be Tencent. But they have their fingers in a lot of the video game industry pies.
That's
so
right.
If you're going to be expressing your interest in video games, your long-term value for video games, you want to go for the big dogs. It's sort of like when Mike was talking about Microsoft or Nvidia. Like, there's no reason to go for the little no-name startup AI company when you can make a bundle. You can make a good amount of money on the big dogs.
Yeah, I mean, this is a huge company, obviously, huge Chinese company. They're sitting on $50 billion worth of cash, of course, held in Chinese yuan, but they're a fantastic company from a revenue and earnings perspective and continuing to do well over the long run. An acquisition like this is well within their domain, the types of properties that they own across their whole portfolio. But to the point, it's still a volatile priced asset. There's still plenty of movement in price to get in on a trade that makes sense.
That's right. Perfect. So that's my my help to the video game community. I think we'll leave it there for this week, unless there's anything you wanted to touch on. But other than that,
no, maybe one last point is that even if Tencent doesn't buy Ubisoft, it's still a much better looking buy than buying Ubisoft.
Agreed.
Right.
And I love the idea of people, you use your interests and then find a way of profiting off of that. In the same way that comic book people who collect comic books, they'll sell their books around the time where a movie is was going to be released during the whole phase 1 and phase 2 of Marvel. That was great. Turn your hobby into something that could actually make you money. And this is how I always pitch it to my kids whenever they're like, "Oh, I'm really interested in this." Okay, what's the trade? Like, what is it? How are you going to express the idea in order to make money off the thing?
That's right.
Yeah. So maybe I better be careful. I don't want them to get into gambling or sports betting or anything like that. But just in regular life, sometimes you just want to bet on.
A lot of people can still make a bad bet, so be careful and be aware of that. Obviously,
that's right.